Thank you guys for tuning in. My audio is good, so mic check 1, mic check 2. If you are watching this back from the replay, take advantage of the chapters and go ahead and skip ahead to the beginning of the show. I am still setting up. Oh my gosh. Okay. Woo! We got that out the way. Guys, it's one of them days. It's one of them days. So if you've been following me, let me start this off first. Today is special. Okay, today is something special. So let me start off with that. Today is special. Why? Because this is the first time we're actually streaming live on X now. So now we're on another streaming platform. We are now streaming live on YouTube, Facebook, and X. So today is the first of many. So those of you who are on X, thank you for tuning in. You're in for a treat. This is going to be an excellent show. I did as much as I could to get prepared to be on time, and you see how that went. You see how that went. Now, I need to get my chats set up to make sure this is working right. All right, and then we're going to get into the show shortly. So we got a few different things going on here. We got a few different things. So we need to get it together. Let me check to see what's going on over here. Run a test chat real quick. All right, that looks good. Go ahead and delete that. Let me go ahead and put this up on the screen. Q&A. Somebody want to ask a question. We got that there. Let me see if X is connected. I don't know. Let me sign into X over here and see what it's looking like. What it's looking like. Let me see if I'm live on X. Okay, somebody is tuning in, and we are live on X. That's good. We got it going. All right. Okay. Close that out. We'll see if these chat things are working as people start putting in the chat. We got somebody tuning in on YouTube. Thank you for tuning in. Hit that like button and consider subscribing to the channel if you had not done so already. If you have not done so already. Oh, man. Yeah, it was a lot of research for this show, but we got 4 companies we're going to look at. I'm going to go into what I'm seeing, why I'm seeing it, and all that other good stuff. So let me find this script. Got it. All right. I didn't finish it because, like I told you, we are still working on getting a format for this weekly recap live. We've been doing it for about, I think, like 3 or 4 weeks, and I'm still in the process of setting up or getting a format like we have for the weekly, for the market recap live. So like Monday through Friday, we got a real good format for that. So we're set. But now with us structuring this weekly recap live to go over what we've been through throughout the week, we still working on getting a nice format set up. But so far, I think it's coming along nicely. So we're gonna go by the script as much as we can for the first half of the show. And then, of course, we got the Q&As coming up where people can ask questions. And they can do that throughout the show anyway. And then I'm going to be putting up the comments from where people are tuning in where they're tuning in from, and if they have any questions and things like that, we're going to put them up on the screen as long as this chat thing is working, okay? Recap live. Weekly recap live. And just put today's date. So 6/28/2023. That's good. All right. Save that, close that out. What's going on? Probably can't put that there. Yeah, that's what the problem was. We'll figure that out. Click save, close that. Go to the beginning of the script. Let me check a few more things, guys, and then we can go ahead and get started. Ninja chat, check. Okay, nobody don't. Okay. All right, we good. We streaming. Okay. Sounds good. Now, I wasn't able to get these tickers up, guys. So we're going to do that as we go throughout the show. But I do have this one. Yeah, so we got that. We got the like, the Q&A, educational purposes. Okay. Now, something's going on with my cursor. We got that good now. All right, let's just go ahead and dive in and get started. There's one more thing with the audio. Yep. So the audio is about to change. It's about to sound better. Mic check one, mic check two. All right. Oh, that crashed on me, didn't it? Yep. Okay. So we fixed the audio. It was a setting that I needed to get done. So we got that now. Okay. Thank you guys for tuning in. Hit that like button, subscribe, follow wherever you're watching from. We're streaming live on YouTube, Facebook, and X now. About to go ahead and get started. Whatever I didn't get done, I didn't get done. But we're going to go ahead and we're going to get into this show because it's supposed to be a little bit more laid back than the market recap lives throughout the week. So let's just go ahead and get started. We're going to take care of this as we go. We're just going to go through it. We're just going to go through it. My lips a little dry. Let me take care of that. Don't want them to crack and bleed in the middle of the show. Let me get my lips together. All right. Now, let's go ahead and get started. Welcome. Let's do this. Let's do this. Let's do this. Let's do this. There we go. Welcome to a weekly recap live. I'm your host, Joseph Martin, and thank God. Ooh, boy, Jesus, all of them. Thank you. Thank you. It is Sunday, and tonight we got a lot of interesting things that happen in this week as usual, because it's never a dull week in the market. So here's what we're going to talk about. One, are institutions scaling back and taking profits from the information technology sector? We're going to look at that. Has the hype, number two, has the hype around SpaceX ran its course and ready to tank? And then three, why did ticker ON, company ON Semiconductors Corporation, tank and take a 23.66% dive on Friday, June 26th? All right. But before we do that, let's do our roll call and check our stream poll. We are streaming live on YouTube, Facebook, and X. Let's get this chat going and tell us where you're tuning in from. Put a YT in the chat if you're tuning in from YouTube, and put an FB in the chat if you're tuning in from Facebook, and put an X for X. While you guys are filling up the stream and the chat, here's the mission statement. We are building a community over here for people who want to take control of their financial situation by learning how to unlock the wealth building power of the stock market. And we are streaming Monday through Friday following trading sessions at 11 p.m. Eastern time. The U.S. stock market regular trading hours are 9:30 a.m. to 4 p.m. Eastern time. And there's a link for the New York Stock Exchange calendar down in the description. All right, let's get to it. So let's go to our sector rotation tracker. So let me pull up the charts. Here we go. Bam. Let's put the right disclaimer up. There we go. And let's put this up. Let's put this up. So we're going to pull up the sector rotation tracker. I know this looks crazy, guys, but just hold on. I'm going to walk you through it. I know you're like, what the heck is that? Oh, this is how we're going to track how the money moving, guys. It's time to follow the money. We want to see where all the money is going, guys. Remember, we don't move the markets. Institutions do. Okay? So I designed this tool so I could look at how each one of the sectors in the S&P 500 are performing on different time frames. So first, we're going to look at the 5-day. So this is going to be all of last week. So this is the 5-day tracker. So the SPX, the S&P 500, is down 2%. Energy is up 0.1%. Materials is down 0.4%. Industrials are up 0.2%. Consumer discretionary is down 2.4%. Consumer staples are up 1.7%. Healthcare is up 7.3%. Financials are flat. Information technology is down 5.4%. Communication services are down 3%. Utilities are up 3.2%. And real estate is up 3.2%. So that was the performance for last week. So we are about to start looking at, before we move on, I'm moving kind of fast. So last week, the best performer, the S&P 500 index itself, is down 2% last week. The biggest gainer is healthcare. They're up 7.3%. Let me pull out some more tools. Healthcare is up 7.3%. S&P 500 is down 2% on the week. And the biggest loser for last week is the information technology sector right there. And they're down 5.4%. So those are the things that stand out this week as far as sectors in the index itself. All right. So now let's move on to track what happened over the last month. So this is going to be the most recent 4 weeks worth of data. So let's go over to that. So here's our 1 month tracker. The S&P 500 is down 2.2%. Energy is down 5.5% over the last month. Materials is up 0.8%. Industrials are up 4%. Consumer discretionary is down 5.9%. Consumer staples is up 0.2%. Healthcare is up 7.8%. And guys, this is interesting. Okay. And the reason why this is interesting is because now that we're looking at a whole month's worth of data, it's up 0.2%. So most of the gain that we've been seeing has happened last week. Okay. Just wanted to point that out from what we're seeing based on these labels. Now, financials are up 4.2%. Information technology is down 1.8%. Now, this is interesting as well, because this means that they had some gains 3 months beyond this week. They had some gains that offset, but it wasn't enough to offset all of the losses that they had this week that we just looked at. Communication services are down 8.7%. 8.7% on the month. Utilities are up 2.4%. When I say on the month, I mean the most recent 4 weeks. I need you to keep that in mind. It's not just June. It's the most recent 4 weeks. Real estate is up 1.4%. Okay, so what stood out in this month? First, let's cover the SPX. So the SPX is down 2.2% for the month. Healthcare is up 7.8%. So they're the biggest gainer in the last month. And the biggest loser are the communication sector, communication services sector. They're down 8.7% on the month. Okay. Now let's clear that out and let's go to the 3 month time frame. Now we see a big difference with the S&P 500, the SPX. So the SPX is up 13.5% in the most recent 3 months. Energy is down 12.5%. Materials are up 5.1%. Industrials are up 12.4%. Consumer discretionary is up 5.1%. Consumer staples are up 4.4%. Healthcare is up 10%. Financials are up 9.2%. Information technology is up 36.7%. Communication services are down 2.4%. Utilities are up 1.9%. And real estate is up 12.3% over the last 3 months. So the S&P 500 itself is up 13.5% on the most recent 3 months. The biggest gainer in the most recent 3 months are the information technology sector. They're up 36.7%. Let me put this box back over here on the SPX. And the biggest loser, energy, is down 12.5% in the most recent 3 months. So that's our biggest loser. Now let's look at the last time frame that I like to look at, which is 6 months. So in the most recent 6 months, the SPX, the S&P 500 is up 6.4%. Energy is up 21%. Materials is up 12.8%. Industrials is up 15.4%. Consumer discretionary is down 6.4%. Consumer staples are up 9.3%. Healthcare is up 3.5%. Financials are down 3.4%. Information technology is up 24.1%. Communication services are down 9.6%. Utilities are up 8.4%. Real estate is up 12.6%. So out of the most recent 6 months, the biggest gainer is information technology. They're up 24.1%. The biggest loser are the communication services. They're down 9.6%. Okay. So that's what we're seeing as far as the sector performance in the S&P 500. Okay. So now we're about to go back to the script and see what else I was able to get planned before the show. So let's get this going. Let's go over there to the script. We can switch the camera to this. We can take that off, put the Q&A stuff up. There we go. And then we do this. There we go. All right. So for all of the companies that we're going to talk about or look at tonight, news and topics, right? So all of the companies that we're going to look at tonight, except SpaceX, is going to support my theory that the smart money, aka institutions, are shifting out of the information technology into other sectors in the market. That's because SpaceX isn't even listed in what we're looking at. Okay, they're not listed in the S&P 500 index, and they're not listed in the XLK. All right. So for those of you who don't know what the XLK is, I'm about to pull it up and I'm about to explain what that is. So let's go back over here to the charts. I want to change this to market closed, pro market closed. All right. This has the SPY pulled up. We're going to pull up the XLK. Now you can see the name over here in the details. This detail box right here. So it says State Street Tech Select Spider ETF. Okay, but I'm about to explain a little bit more of what this is and what we're looking at. And the time frame that we have pulled up right now is a 10-year weekly chart. So let's go to a 1-year daily chart. So this is the 1-year daily, and I'm pointing out what that is. So let me explain this a little bit more. So the ticker XLK is in the State Street Global Advisors ETF for the information technology companies that are listed in the S&P 500 index. Its official name is Technology Select Sector Spider Fund. But up here it has ETF, but that's the official name of it. All right. So after following the money with the sector rotation tracker, right? So after following the money with the sector rotation tracker, we saw that healthcare was the biggest gainer this week, up 7.3%. And information technology was the biggest loser, down 5.4%. So what we're attempting to do, we're attempting to see where the money is moving in its earliest stage. We're not trying to find this out 6 months from now. So 6 months later, looking back like, man, I wish I had known that they was pulling money out of information technology and moving it over here, or we want to know this as soon as possible. So that's why we're looking for signs in the week. So that's the 5-day tracker, and then the month. Where is this money moving out of, and where is it moving to in the week and in the month? Those are going to be our earliest indicators. That's why I'm using that too. And that's why it's powerful in how we're going to look at it and how we're going to examine it. Okay. So this week on the Market Recap Live, we covered Moderna twice this week. Okay. And on Monday, they were the biggest loser. And then on Friday, they were the biggest gainer. So let me pull them up on the charts to show you what I'm talking about. And then I want to do this because we don't know how things are playing out with people tuning in or asking any questions or things like that. So I'm just going to take my time and do this the way I want to make sure this is done. So let me take the Q&A off the screen. We're going to pull up Moderna. mRNA. mRNA is Moderna. Okay, so we're looking at a 1 year daily chart, but I want to make sure I put their ticker on the screen. So this may take me a little second, but I'm gonna do it. I'm gonna do it anyway. So we're gonna go to prompter overlay and do that. Why is that off center? I have no idea. If I cut it off, you won't be able to see me. Something's up. Let me see if I can move this. Prompter. It's locked. It shouldn't be off center like that. Yeah, we're not going to do that because I'm already seeing that it's going to cause some issues. So let's just go back to where we were. Take that off. Go here. All right, let's go back to the charts. We're not going to fool with it. Put the Q&A up on the screen. There we go. All right, so with us looking at Moderna, 1 year daily chart, this was Friday's candle, guys. This candle right here. So this red candle we have was Monday. So what I did, I tracked this low from Monday to the close on Friday. So I just wanted to point this out to you on the chart as I talk about what I have here on the script. So let's get this going. Monday's low of $57.50. This low right here. Let me put this right here so you can see it. Come on, tools. Price level. $57.50. So that price level identifies that. I can remove it. The other thing I can do, I can pull up my floating data box and I'm gonna mouse over this candle so you can see it. The low, $57.50. That's on Monday. We can see the date up there at the top of that floating data box. Okay. So Monday's low of $57.50. And on Friday, they closed at $67.27. You can also see that up here. So this is Friday's close. Another way to see that is if we just mouse over Friday, we can see that the close was $67.27 in the floating data box. All right. So which was a recovery from that low of going up to 17%. So if I said that kind of crazy, I'm going to say it one more time and clear this floating data box off so you can see what I'm saying. The recovery from Monday's low. So Monday's low was $57.50. It closed Friday at $67.27. From that low to Friday's close, right here in this box, is roughly 17%. It's a 17% gain from Monday's low to Friday's close. Okay, so that was a good recovery from from that lowest day that week, up 17%. So this led me to start looking at the other companies listed in the S&P 500 index that are in the healthcare sector. Because what we're looking for clues of early money moving into these different sectors, because everybody is talking about information technology. And then they started noticing that energy was getting a boost because people started understanding that it requires a lot of energy to power those data centers, and they're using a lot of water and all that other stuff. And then with the conflict over with the Strait of Hormuz, I hope I'm pronouncing that right, the global issues with stuff over there, the war and all of that, the fighting, that caused the oil prices to go up. That's also in the energy sector. So now that that's supposed to be calming down, and we still got some rocky stuff going on with that, the oil prices and gas are starting to come down. So that's causing the energy sector to come down a little bit as well. So I'm looking for clues of where this money is flowing. That's what we looking to identify. So when I seen this happening with Moderna, I want to look at how the other companies are performing inside the S&P 500 sector in the healthcare, in the S&P 500 index in the healthcare sector. That's the right way to say it. Okay, there we go. So a quick way to do this is to pull up the XLV. Ticker XLV is the State Street Global Advisors ETF for the healthcare companies inside the S&P 500 index. So I'm gonna show you a couple of things today, because the last time I tried to do this on the live stream, I messed up, and I'm gonna explain to you how I messed up and why I messed up. Okay, so what I did, I went over here to the scan tab, and when I went up here to scan, I was under the options hacker. And then I put all my stuff in and everything I was looking for was not coming up. But that was because I was using the wrong sub tab. I'm not pulling up options. I'm pulling up stocks. So I was under the wrong sub tab. So once you're on the correct sub tab, there's a quick way for you to be able to break this down and focus specifically on what you want to look at. And I'm about to show you right now how you do that. We don't need these. These are 3 scan filters right here that are pre-set up in this tool. We don't need those. So what I'm going to do, I'm just going to click X and close those out. We don't need any of those. What I'm looking for, we're going to change this drop down to over, we can put 500. Just put 5. Nope. I'm going to put 1,000. I'm going to put 1,000. There's 502 companies or 503. I don't know. The reason I don't know is because when I looked at 2 different tools, they gave me 2 different numbers. And we got time tonight, so I'm gonna go ahead and show you what I mean. What is the name of that website? Let me pull this up off. Let me go here because I don't want you. Let me pull up this site first. I think it's called Stock Analysis. Stockanalysis.com. I am signed in. All right, I'm already signed in. I pulled up the website and I'm gonna bring you over so you can see it. So this website is called Stock Analysis. They have a free version. They have other versions, but you can pay for this one. But I'm trying to see if they even got what I need before I pay for something like this. But anyway, what I'm looking for, they have a scanner on here. So right here where they call it a screener. So right here for stock screener, I'm going to select that. And what I'm looking to do, I already did it on here. So let me remove these. Remove all filters. So right now it's saying that it has access to 5,592 stocks. What I'm looking to do, I want to break this down to where it's just the S&P 500 companies. That's all I want to see. I don't want to see this whole list of 5,592 stocks. So what I do, I go to add filters. And then I'm going to scroll down to where it says company info. And right here it says in index. And I'm going to select that. And let me make sure I'm zoomed in enough. Yeah, 150. Now, after I said in index, it's saying any. We want to change this to S&P 500. All right, now that I did that, you see where it says 502 stocks? I'm like, man, how come you don't know what you're talking about? I'm going to show you. Over here, it says 502 stocks. So they could have updated it, but I'm about to explain to you why. On one of these, I saw 502, and then on another one, I saw a different number. So now when I close, I don't need to close this out. Let's go back to the Thinkorswim platform. And I got that ticker up anyway. So now what I'm going to do up here where it says all scan in all stocks, we don't want to scan all the stocks. We just want the S&P 500 index. So we go down to where it says public R through W, go to S&P 500 and select that. Now it's just going to look there. So when I click scan, where is the number? See over here? Now it's saying showing 501 out of 501. It's not giving me 502. Now we use 2 different tools that's supposed to do the exact same thing. On one of them, it said it's 102 companies. And then over here, it says 501. Somebody wrong. I don't know which one wrong. That's why I said I don't know. Okay. So now that we did that, both of these tools can do the same thing. So if you don't have the Thinkorswim platform, I'm going to show you how to do it on this one first, and then we'll come back to that one. So now we have it narrowed down to the S&P 500 index. Now we want to add another filter. We want to go back to that section that breaks it down to sectors. So we select the sector box, go to the filter, and we want to change this to, what were we talking about? We were talking about healthcare. So we select the healthcare sector. And now what it did, it said it's 59 stocks. So these are the 59 stocks inside of the S&P 500 that are in the healthcare sector. Now, when we go back to the Thinkorswim platform, we're going to do the same thing. We're going to add a filter. So right here where it says intersect with, we're going to go down here to where it says by industry. Can you see that? Let me take me off the screen. By industry. And then we're going to go over here to where it says healthcare. Select all healthcare. Now, when we click scan, Where's the number of things that it says? So it says showing 59 and 59. If you don't know where I'm looking, right here. So now they're giving us the same number. You have 59 on Thinkorswim, and you have 59 on stockanalysis.com. Let me put me back on the screen. And I need to find out what number this is. Give me a second, guys. What number are we looking at? There's a hotkey number I want to make sure I'm using. So here we go. That makes it where I can switch through these a lot easier. So here's Thinkorswim, and there's the website. Got it. Okay, so we're going to go back to Thinkorswim, take this off. So now, with me looking specifically at these companies on the Thinkorswim platform, I know that it's 59 companies, and we could change these to what we want to look at. Which one of these have the largest market cap? There we go. So Eli Lilly is the one with the largest market cap inside the S&P 500 index inside the healthcare sector. But what caught our attention was Moderna, right? So let me show you what we look at to focus on Moderna. There's a few different things we're going to look at. First, let's go over to the Analyze tab. When we go to the Analyze tab, we're going to type in XLV. Now down here is going to give us the weights of how this ETF is set up. So the largest weight is usually the largest market cap. So those market caps are going to go from the largest down. So Moderna is going to be somewhere in this list. Eli Lilly represents 15.81% of this ETF. That's what its weight is in that healthcare ETF. But what caught our attention was Moderna. I'm going down the list to attempt to find it. Show all companies, MRNA. So it's number 44. So that's one way to find it. So it's 0.37%. That's what is weighted inside that ETF. So now what we're going to do, we're going to go over to the Market Watch tab, and we're going to go to Visualize. Now we're in the S&P 500 watch list. Take me off the screen. Now what we're doing, we want to look for the healthcare sector. It's right over here. Look at how most of this is green, guys. This was Friday. And remember, we did our research at the beginning of the live stream. We looked at how the healthcare sector performed this week. We looked at that with the XLV on the chart. So here is Eli Lilly. Here's Johnson & Johnson. This space represents the market cap size. The bigger that space takes up, the larger the market cap. So we know that Johnson & Johnson was number 2. When we looked at that list, let's go back real quick so we can see it. When we go over here and analyze, look at the list. You got Eli Lilly, you got Johnson & Johnson. Then you have a BV Incorporated. I hope I'm pronouncing that right. But anyway, and then you got UNH. So we're going to look at ABBV, ticker ABBV, and ticker UNH. So we'll go back over here. ABBV is here. So that's the third one. And then UNH was number 4. So we can see the sizes of those to prove what I'm telling you as far as the market cap and the size they take up on the heat map. Okay. So we're looking for Moderna. Moderna is inside the healthcare sector, inside the biotechnology industry. Okay. And there they are right here. MRNA, ticker MRNA. And the biotechnology industry, the sub-industry is the same thing. So both of those are the same. Biotechnology industry, and then when you go inside of it, the sub-industry is also biotechnology. Guys, this did very well on Friday. The whole doggone thing is green, and this caught my attention on the live stream that we did on Friday for our market recap live. Okay, so now what we're going to do, we're going to go to the charts, and this is the healthcare ETF. Guys, it's going crazy. So everybody talking about information technology. The 52-week low for XLV, right up here, ticker XLV, which represents the S&P 500 healthcare sector. The 52-week low is $127.96. 52-week high is $160.64. The previous 52-week high looks like it was this red candle right here. So that took place. Let's check this. I'm going to go to price levels. The high on that candle was $160.50. The high on this candle was $160.54. If you don't know where I'm looking right here. High, $160.54. I mean, $160.64. Another way to do this to make it easier for you to follow along, let me cut the floating data box back on. So when I mouse off over these candles, it'll be right here in the box. So this green wick right here looks slightly higher. So the high on that one is $160.59. The red one is $160.50. So we know that the higher candle was this one. So we're going to look at this one. That was 160.24. So that wasn't the 52-week high. The 52-week high before this one was this one right here, this green one. So this week's, that Friday's candle broke that high. It didn't close above it, but it created a new 52-week high. So the last time it had a 52-week high was on January 7th. So what we're doing now, guys, if I'm boring you, you don't want to make no money. I'm just going to be straight up with you. You don't want to make no money. If it was easy, everybody would do it. What we're doing right now, this ain't about fun. This ain't about being entertaining and funny. This is about doing the work. We're doing the research. We're doing the research. This is what you're supposed to do. You're supposed to actually look to find out what's going on. How does this stuff work? How can we look to see where the money is going and why and stuff like that? So this is the work that needs to be done. And I personally haven't seen people on YouTube, for instance, doing stuff like this. They share data, but actually doing the work of showing you how you look at this stuff for yourself, I haven't seen it. And I wish somebody did this for me. So this is why I do this. This is why I do these streams. This is why I make myself available for you guys to ask questions or tune in to see how this stuff works. But that's what we're looking at. So while everybody is looking over here, it's like a magic trick. You watching this hand because it's moving, but they taking your watch off your wrist with this hand because you wasn't paying attention to it. Because everybody talking about the information technology sector. But now we go look and do a little research. We like, wait a minute, healthcare over here banging. Ain't nobody even talking about it. So Moderna was what actually caught my attention. So then after Moderna caught my attention, this makes me look at all of the companies inside the healthcare sector now. And now when I do that and we go look at the healthcare sector, they're all doing well. And we seeing that show up in the sector rotation tool as well. So you got different industries. So pharmaceuticals did well. It was only one company that didn't do well on Friday. So this heat map isn't showing us the whole week. The heat map is showing us Friday. But then we're getting the average gain and the average loss by using the rotation tracking tool by looking at the whole week to see how it performed as a whole. But all it's doing is giving us the XLV. It's giving us this. So from Monday, this is a 1-year daily chart we're looking at right now. Let's break this down. So this is the XLV. So for the XLV, we're looking at a 1-year daily chart. That's what we're looking at right now. So from Monday, it went from this close to this close. So the range, what we're going to do, I'm going to do the open. So let me zoom in. Let's do that. I'm going to zoom in on what I'm talking about. Here is the open on Monday, the bottom of the green candle's body. We're going to link that using the trend line tool from the open on Monday to the close on Friday. And then we can see what type of percentage gain that is. So it went up 7.37% from Monday's open to Friday's close. It looks more dramatic on the chart than the percentage gain we're actually seeing. But that was a nice move because that was going from, what was that opening price? The opening price on Monday, zoom back in. The opening price on Monday was $149.33. And then they closed on Friday at $160.34. All right. So let me go back to the script because I spent a lot of time on that. So let's go back to the script. I'm on the screen and then we keep talking about this. So while everyone has their attention focused on the information technology sector, they all looking at that, right? They're like, ooh, information technology. Like they're all over there, right? So while they got their mind focused on that, the information technology and what SpaceX, SPCX ticker, this is happening. What we looking at. Okay. Now I want us to look at the XLK ticker XLK. Something that we've noticed on Friday during our market recap live when we looked at this was that Friday's candle formed a doji, which signals indecision. All right. What we found was that industries inside of the information technology sector that was gaining, it was some industries that were gaining and there was others that were losing. So I'm going to show you what that looks like right now. Let's go back to the charts. My nose is itching, guys. So if you see me keep reaching for my nose, it's itching. So let me cut this floating data box off. We got the XLK pulled up. We need to pull up the we have the XLV pulled up. We need to pull up the XLK. So the XLK is the State Street Global Advisors ETF for the information technology sector inside of the S&P 500 index. So now we need to break this down and look at the companies that are inside of here. So let's go back and break this down a couple of ways. So one, we're going to go on the stock analysis website and we're going to change this sector from healthcare to technology. So now it's telling us that it's 83 stocks inside of that. And it has the largest market cap at the top, I believe. So you see NVIDIA, Apple, Microsoft, Broadcom, Micron, AMD, et cetera, et cetera. So we're seeing that on this website. Now, let's use our stock scanner over here on. So we go to scan, we go to the scan tab, and we go to the stock hacker sub tab. Now we had it on healthcare. So we're going to go over here, change the industry, take me off the screen so you can see it, to information technology. Select all information technology and then click scan. So now we have a new list. And then over here, now see, here's what I'm talking about. Now over here, it says showing 75 of 75. Okay. But over here on this website, it's saying showing 83. This is what I mean. Like, these tools are not consistent. And I have no idea why or what's going on with this. This would take more time for me to find out. I just want to point this out to you so you can see that these tools that we have as retail traders, they're not going to be as accurate as the institutions. We're at a severe disadvantage. So we have to keep our eyes open to see what's different, what's the same, how this works, how that works, and compare tools. Okay. We need to do that. We need to keep our eyes and ears open. So here's the information technology, and we already have this broken down by market cap. You see how it gets lower as it goes down? So you got NVIDIA, Apple, Microsoft. So we were right with that. They have this list broken down by market cap, and then we can adjust ours. I don't know if you can do it on that website where we're looking at. So now it's lowest to highest. Okay. But we want it from highest to lowest. So NVIDIA is at the top. Now, the other thing we can do, we can go back over to the Analyze tab. And we have XLK pulled up. And now we can see the weights. So you have NVIDIA, Apple, Microsoft, and they tell you how much they represent inside that ETF. So NVIDIA represents 14.79%. And then we can just go through that list. Now, let me see what I got in my notes. So we broke that down. We looked at the charts. And here's what caught my attention. Guys, it started stalling. It found support down here on the $180.22. But Friday did this doji. So the idea was if these two industries performed horrible So if it was bad, how come it just wasn't one big red candle that went down? That's the question we need to answer. So when we go to the Market Watch tab and go to the Visualize sub tab, and we're going to go to the S&P 500. So now we're going to go to the information technology sector. Let me take me off the screen. So here's that whole sector. This is why the candle is not completely red, guys. This is why you have green balancing out with the red. This is why. So now when you look at the candle, you see that the candle is a doji, is kind of balanced instead of just one big red candle, because the whole sector did not actually perform poorly. Apple did well, Microsoft, and those are some big market caps because of the size of that space that it takes up on this Visualize tab, okay? So here's what I want us to pay attention to. This in particular sector right here, the semiconductors and semiconductor equipment, none of them were green on Friday. This whole sector, which is the semiconductors and semiconductor equipment sector, bombed on Friday. All of that was red. So there's another sector that there's another industry inside this sector that performed poorly on Friday, and it was this one right here: technology, hardware, and storage peripherals. Apple was the only one that was green, and it takes up a large market cap based on this sector, based on this industry. I keep saying sector, based on this industry inside the information technology sector. So the industry that we're looking at is technology, hardware, and storage peripherals. It's the same as the sub industry. So if we were to click on this drop down, it's the same thing. But you can see 1, 2, 3, 4, 5, 6, 7, 8 companies were red and only Apple was green. So these two industries inside the information technology sector performed poorly, guys, on Friday. So let's talk about, let me go back to my script. And we working on it. I know things are a little shaky, but we working on it. We gonna get through it. So information technology, what we found was that the industries inside of this was okay, but the industries that were losing were the companies with the largest market caps and the highest weights in the XLK and the SPCX. Right. So we talked about that. So these large market cap, look how big Nvidia's market cap is. Pull that up so you can see it. So Apple and Microsoft. So Microsoft is over in the software industry, and then Apple is large enough with their market cap to offset some of this red. That's why that doji is like that on the charts. That's why you're getting a candle like this. But overall, those industries performed poorly on Friday. I hope you got that. All right. And then in the script, I reiterated what those two industries were inside the information technology sector. So that was the semiconductors and semiconductors equipment industry, and the technology, hardware, storage, and peripherals industry inside the information technology sector. All right. So first, this is what I want to talk about when it comes to those companies that stood out to me in the information technology sector. I want to talk about ON Semiconductors. Okay. Guys, they lost over 23% after gapping down from $118.74 close on Thursday to June 25th closing at, now wait a minute, Thursday, June 25th. Let me pull up the chart so you can see it. I'm trying to follow this script and tell you the same thing at the same time. I want to show you this. We can do it that way. So up here on the charts, right up here in the symbol box, I'm putting in the company, ticker ON. So here's the company. I know it's a lot of lines. Give me a second. I'm gonna zoom in. I'm gonna break it down. So we're looking at a 1-year daily chart, guys. I'm gonna spread this out and break it down. Let's break it down. Let's take this a little slower. So what I'm saying is this: ON is in the information technology sector. They had something crazy happen on Friday. They gapped down with no news. What do you mean no news? Like, they didn't even explain to you. It was no narrative to explain why this stock just dropped down like that. Nothing. There was no earnings. So the last time they had earnings, take me off the screen. The last time they had earnings was on May 4th. They don't have earnings again. Do they have a date here? Until August 3rd. That's what they have on there right now. So let me zoom in and explain this price action we see. Here is Thursday's candle. They closed just below the 9-day simple moving average. Okay. So when they gapped down, they opened right here. So that open was on $98.29. So they gapped down, I think around, I have it in here. Let me read the script. So I'm giving you the visual what's going on, and then I got the script because I got it in my script as notes. So they lost over 23% after gapping down from $118.74 close on Thursday, June 25th. So that's what that was. Thursday was June 25th. So they closed at $118.74. So let me pull up my floating data box so you can see that in here. So they closed at $118.74, right? Now it's Thursday, June 25th, and they closed at $90.65 on Friday. So this candle right here, you see the close, $90.65. Now, the most interesting thing about this isn't the gap down and losing over 17% overnight. So from that close, let me take this floating data box off. From Thursday's close to Friday's open was a loss of 17% overnight. The gap down fill down here at April 23rd. So this gap right here happened back here. So you see that date down there at the bottom, April 23rd, that was when that gap happened. The price came all the way down and filled that gap. I also had that gap as a support zone on the chart. That's why it's not yellow, because I usually identify gaps with yellow. So now that we're looking at that, it gapped down over 17% overnight, lost over 23% that day, and then filled that gap all the way back from April 23rd. That wasn't even the most interesting thing about what took place. It was the fact that the stock did this without a catalyst. There was no news or explanation besides the fact the market was mixed, or in other words, confusing. And here's what I want to show you about that. So over on the left-hand side of the screen, let me take me off the screen so I can show you this. If we look over here and we use the news right here, this is a little news feed on the Thinkorswim platform, 6/26/26. We open that up, click on that. Where is it? Where is it? Where is it popping up? It's making me look crazy. Oh, come on now. Don't do this. Where are you popping this news up at? Guys, it's a window popping up somewhere. I just got to find it. Give me a second. I don't know what's going on. I don't know what's going on. We're about to figure it out. So if I minimize this, Thinkorswim, there it is. Here's the news. Got it. Put this back up. Blow that back up. And then the news needs to be on top. There we go. Put me back on the screen. Have me looking crazy. Here we go. All right. So here's the news. Blow this up a little bit. And we're going to read this. So this article, and this might be small. I don't think I can make this any larger for you guys. This article was automatically generated by Dow Jones using technology from Automated Insights. Shares of ON Semiconductor Corporation cratered 23.7% to $90.65 on what proved to be an all-around mixed trading session for the stock market, with the S&P 500 index remaining mostly unchanged at $7,354.02 and the Dow Jones Industrial Average falling 0.1%, blah, blah, blah. You can pause this, you can read through it, but these companies that they're talking about their peers. So these are other companies inside the S&P 500 index. Now let's identify if those companies are inside the same, not the S&P 500 index, the information technology sector. But are these three companies also inside the same industry? You have Qualcomm, Broadcom, and NVIDIA. So if we go over to Market Watch, there's Broadcom, there's NVIDIA, and the other one was, let me go back to that news. The other one was Qualcomm. I think Qualcomm. What is the ticker for that? Let's go over to the charts. Qualcomm, QU. QCOM. Now I'm gonna go over and analyze. Yeah, they're in the information technology as well, but I didn't see them. So let's go back over to Qualcomm. I see it right here. Their market cap is small, right over here, smaller compared to the other ones. But you see it, QCOM, ticker QCOM. So they are in the same industry. So it wasn't just that they're all in the same sector, they're in the same industry. And they were talking about how their peers performed as well. But ON is right here, and they took the biggest hit. But they saying all of them performed poorly. But there was no real reason behind it. So that's what's catching my attention, guys. That there was no actual explanation about why did it drop like that. So we talked about that. I'm going through the script to see that I'm not repeating myself or something that I said. Matter of fact, I don't even care. I'm gonna read it. So, and ticker ON is in the information technology sector in the semiconductors and semiconductor equipment industry. So if they could just snatch the rug from under everybody with no news or explanation whatsoever, that leads me to believe that it's simply institutions taking their money out and moving it elsewhere. That's my hypothesis. That's what I think. I think that institutions are just simply taking their money out and moving it. That's why the news don't have an explanation about what is actually happening. And it didn't happen overnight, like out of nowhere, okay? So that's my thesis on that about why what's going on is going on. Now, it's a couple of other companies that I wanted to talk about tonight before we wrap this up. So we talked about Moderna briefly. I know I had SpaceX in there, and then we talked about ON. So we got ON out of the way. I want to talk about Micron. Let's go back here. Let's go back here. Let me pull it up on the chart. So here's my thing with SpaceX, guys. And I'll keep this brief to do my best to explain what's going on. SpaceX IPO'd at $150. It's trading within $5 of that range. It's really beat down right now. So I did a little research before I did the live stream, but I wasn't able to complete everything. So fact check me, please. don't just take my word for it. Please do your own research, because I can just try to recall some of the things I looked at. One of the things was that SpaceX has acquired 2 companies since they IPO'd. So before they IPO'd, SpaceX was already more than one company. Like most people think, I wouldn't say most people, some people think that SpaceX is just the rockets. It's not just the rockets. Like X is even included in SpaceX. So if someone is investing in SpaceX, they're also investing in the social media platform, X. That's part of it. Then you have Starlink. And then they purchased 2 other companies, and they did it as an acquisition using shares. So from my understanding, when a company does that, when they purchase another company using shares, that dilutes the overall share count. So people that invested in SpaceX before they purchased those other companies using shares, they had a larger percentage of equity at the time they purchased those shares. After SpaceX acquired these other 2 companies, that caused share dilution. So if you don't know what that is, I'm gonna try to explain this real simple. It's a way of them taking money out your pocket without reaching in your pocket. Think of it like that. So if the company is a pizza, the value of the company is a pizza, and I tell you, okay, we only have 4 slices of this pizza. The 4 slices are going to be divided up equally. You got 2 slices. Here's the catch. When a company starts to add more slices, your 2 slices remain 2 slices, but they don't remain the same size. Your sizes get smaller. You still have 2 shares, but because we've added more slices, or as the company adds more slices, it makes the slices that already exist smaller because they're cutting from the same pie. So your share count won't change. This is why it's an illusion. You still gonna see you have 2 shares. But when it was just 4 sections of that pie, when you had your 2 shares, you own 50% of the company. So if they add 4 more shares, now your 2 shares only represent 25% of the company. Your equity decreases. So they call that share dilution. So this is a way of them taking money from you without you realizing they taking money from you, but they taking it from you in a word that's called equity. So that's your value of what you own or the percentage you own from the company. So this doesn't even include the other things that SpaceX has coming out in the future, as far as when these other shares that are locked up aren't locked up, and then they can get in the open market. Those are only days. This looks crazy, guys. This is only a few days. So this was a Friday. So Monday, Tuesday, Wednesday, Thursday. And I think that week had a holiday in it. So the market wasn't open that Friday. It was Juneteenth. So then you had Monday, Tuesday, Wednesday, Thursday, Friday. So SpaceX has been trading for 10 days, guys. Basically 10 days, and it's back down to where it started. And since then, it went lower than where they opened at. This company was overvalued when it first hit the market. They were charging everybody way too much for the company, and they've made moves since they've IPO'd that have reduced the value of the company even more. One form was share dilution. The other form was, look this up, they did something with corporate bonds. They raised something with something called senior notes. Let me look this news up. It might pop up. Please don't give me a hard time. Let me read through this. That was the exclusive space benefits, corporate insider, regular investor, a weak Tesla crash, space a whole. New bonds. There it is. All right. So the new bonds. Let me bring this over so I can show you what I'm talking about. Come on. Look how long this, we don't need this article be that long to tell you they screwing you over. You see how to make you read all this to realize you're getting played. Oh, so let's just try to get through this. I want to point out and tell it the main part about this, because I didn't read this article. I just know it mentions what I'm saying as far as like new bonds as investors pump the brakes on the AI frenzy. I'm trying to explain to you why this is a bad thing. So Elon Musk company made a splash earlier this week with a 25 billion bond deal less than 2 weeks after it raised tens of billions of dollars in cash. So what does that mean? This is what I want to explain to you. Okay, what this means. What that means is they just made a whole bunch of money. So if you just made a whole bunch of money, what do you need more money for? Right? That's the idea. Now, how they did it was responsibly from how they explained it. Okay. Now, I don't know how the original deal was structured as far as how they were going to manage the debt, but I'm explaining to you what I found in my research, and I'm telling you to fact check me. This was my research, and from my understanding, it's correct, but you need to do your own research. So the thing with these senior bonds is the way that they're secured is that if the company does, they already, let's start here. The company already carried a lot of debt before they IPO'd. So the idea was after they IPO'd, they wanted to reduce the interest on this high interest debt that already existed. So they didn't technically take on additional debt. They replaced debt they already had. Did that make sense? With a better interest rate. So the reason the interest rate was better was because now they've secured credit to transfer that debt. So they're going to pay off the high interest debt with the new money that they raise. And then the new money that they raise through this new debt will have a better interest rate or a better type of debt structure. So these are going to be senior bonds. And that's what they're talking about in here. They might not use those words like they just saying corporate bonds or new bonds. But when I looked it up, This is going to be posted on the SEC website. So we talked about that from time to time. So let's go to the SEC website and see what we can find. Let's just go ahead and do it. So we go up here, sec.gov. There we go. So we go here, blow this up. Now with us being on the SEC website, we go to search filings, full text speech, full text search, not speech. Then we go up here and we type in SPCX. Select that. Now, they released a report about this. So what we're going to do, we're going to go back to the news, find out what date that was that they put this out here talking about something with the bonds. 25 billion. So it was the 26. See how now it's saying senior unsecured notes across 5 maturities. But when we read the article, it didn't actually say senior unsecured. It was just saying bonds. So these guys, these word games are something crazy, man. You got to pay attention to this stuff. So 26. Then you got something on the 22nd. So let's see what they're talking about here. Open document. Announcement of inaugural bond issuance. You see that? So when we select this, so now it's going to explain. Now, this is stuff they have to do on the SEC website, and this is stuff that people don't talk about. When I'm looking at these videos online with other content creators, I'm trying to figure out, you know, what is it they're sharing or what they're talking about on the research end of these things, like to really dig into understanding what this stuff means. So here's the information that they had to explain what was going on. So it tells the investor, it discloses what they're doing and why they're doing it. So it'll be right here. So June 22nd, 2026, Starbase, Texas, Space Exploration Technologies Corporation, SpaceX, that trade on the NASDAQ, here's their ticker, today announced the commencement of its inaugural offering of senior unsecured notes. So now this is a specific term that someone needs to look up, research, and understand what that means. In the news, they said bonds, corporate bonds. It's a type of corporate bond, but there's different types. So this is why someone needs to look this stuff up. Subject to market conditions and other factors, the notes will be unsecured obligations of SpaceX and will rank equally in right of payment with all existing and future unsubordinated indebtedness, liabilities, and other obligations of SpaceX. SpaceX intends to use the net proceeds of the notes offering to repay the outstanding borrowings under its bridge loan facility in full and pay related fees and expenses in any remaining amount for general corporate purposes. The notes are being offered to persons reasonably believed to be qualified institutional buyers, blah, blah, blah. This relief does not constitute offer, sale, or solicitation. Okay. So basically what they're saying, from what I got from that, was that they're going to use it to pay off other debt in full. Now, here's why this affects stockholders. Because these are senior unsecured notes, if the company goes out of business and liquidates, this lender gets paid first before shareholders. From my research, this is why it's risky for the shareholders. They're last in line to get paid if the company liquidates and goes out of business. That's a risk. That's where book value and things like that come in at. What assets does the company own? So when they liquidate assets and they start selling things, if the company goes out of business, these loans come first. Bonds, they're going to get paid back first. Liabilities and other obligations, equally right of payment. This comes before shareholders, guys. So SpaceX is on the move with taking advantage of its current valuation. Elon is not dumb. And I've never thought that, but investors are buying a story. This is what's driving me so crazy about it. It's just on the sidelines looking in. People are buying a story. They're not actually looking to see how this stuff works and what's really going on. So Elon is using a temporary valuation of a company he knows that isn't profitable right now, leveraging the idea of the story to create a value that does not make sense, and then use this temporary value to buy stuff with it and take out loans with better interest rates and all different types of stuff. He done purchased 2 companies since then with just using shares to be able to do it. This is the game, guys, on their end. And this is who we up against as investors and traders. So we have to do our own research. So I talked about SpaceX. I talked about ON, but I don't think I went into too much detail about Micron. And I know I said I had put that in the title. So let's pull up Micron. So that's MU, and let's talk about that. So here's what blew my mind about Micron. And let's zoom in. You can already see that it's pulling back, guys. And it's still trading right now. But Micron is also in that same sector. So since then, I don't even remember when we looked at Micron. But I'm explaining to you what's happened since then. Let's go ahead and get into this right now. So take that off. Let me adjust this chart, and I'm gonna zoom in and show you what I'm looking at. So as I'm looking at Micron, I believe the last time we looked at Micron, it had to be before Thursday. So this is Thursday's candle, this one right here. Okay. Let me blow this up a little bit more. This is Thursday's candle. Now, how do I know that the last time we looked at this was a little while ago, or at least before Thursday? Because I have a gap here that extends all the way out to December 1st. So technically, this is how we would have started to close this gap, because that gap has been filled. The gap was between this candle right here, which was June 22nd. I'm gonna cut on my floating data box so we can walk through this process, okay? So here was the candle for June 22nd. So that would be Monday. That's the 5th candle going backwards. Friday, Thursday, Wednesday, Tuesday, Monday. So Monday's low to Tuesday's high created a gap. That's the yellow, right? That's the yellow. Once we got to Thursday gapped above that gap. So it missed it totally. And then it created a low that came down to partially that gap. So that date for Thursday was 6/25/26. So this is how we would have did that. We would have went up here to the settings. No, we wouldn't. Wait a minute. Yeah, go to the settings. Take the floating data box off, and we want to change the prices on this right here, on that gap. So the low of that candle was 1136.31. 1136.31. Let me bring it over so you can see it. So what that's going to do, and that's the wrong thing. That's not what we wanted to do. Let's cancel. We want to bring the bottom up. 1136.31. We want to bring the bottom up. 1136.31. Edit the bottom. Right. 1136.31. 11. The top down. We want to bring the top down. Guys, I'm struggling with this. Give me a second. We want to bring the top down. 1136.21. Got it. That's what I wanted to do. So the price was above it. It came down and it started to close that gap. It started to close it, but it didn't close it all the way. But the price action on Friday did, guys. The price action on Friday did. It filled that gap because the low came below. The low of this candle came all the way past it. So we can go ahead and remove that gap now. Got it? I know it took me a minute, but we got through it. So that gap has been filled. The positions of those candles look extremely bearish right now. This looked okay because of the way it gapped up. But then this candle in particular, it opened here, gave a run during the day, and was not able to reach the open and the close of the previous day. It did not reach the body of the previous candle. Then it sold all the way back off and closed below where it opened at on Friday. And that week's candle is red because it opened up here on Monday. So if we go back and we look at Friday's candle, not Friday's candle, we look at the candle for the week. This is that candle right here. That's this big red candle right here. That's last week's weekly candle. So now we're looking at a 10-year weekly chart. And it looks confusing. It looks confusing because even though it opened up here, it closed like right on the top, like right near the close of last week. So it's almost like it didn't move. Okay. But then you have a bullish indication because it was able to come all the way down here that week and then close up here above those areas of support at 1125 and $1,089.29. So it's a confusing looking candle. It's not a clear cut candle to tell you, okay, this run to the top is over. Okay. So it's just a confusing weekly candle. And then when we look at the daily candle, it looks bearish to me. But the weekly candle looks confusing. It did still close above these two levels of support, and it's above the 9-day simple moving average. But this hasn't been filled down here. And the way, I know it's a different company, but remember, ON gapped down with no news and came back down and filled the gap on this chart. And sometimes people look at the index, they look at the whole sector, they look at certain industries to see how other companies are performing to make a decision on what they're looking at. So even though they knock earnings out of the park with that crazy EPS jumping up like that, because I did a little math on that and did some research on how the price to earnings work. So let me see what I got. Let me bring this over so you can see it and zoom in. Am I still on the screen? Yeah. So let me blow this up and zoom in so you can see it. View, zoom, 200%. Okay. Yeah, that's good enough for you to see it. So here's Micron. I had to manually put in what you see highlighted yellow at the top. I got this off the SEC website. You got the PE ratio, the trailing 12 months. This is the most recent one. Now, where did I get that number from? Where did I get these numbers? I'm going to show you where I got these numbers from. Okay. So the PE ratio, no, this was the price at the time before the earnings came out. So I had to manually go get that number. Okay. The PE ratio, TTM 2555. Is that a formula? No, that means I plugged that in from somewhere. So let me see where I got that number from. Go here. We go to analyze stock analysis. Okay, so we go to stock analysis. And when we go over here, MU. No, it wasn't like this. This is my first time using this website today, so I have to learn how to navigate and use this. Okay, so let's go to stock screener. MU is in here. Let's go to performance, PE. We're trying to find PE, valuation, PE ratio. There it is. That's where I got it from. Right here. Micron Technology, PE ratio 25.55. That's where I got that number from. So let's go back to my spreadsheet. Okay. So that's where I got that number. This was the current price, right? That's the current price of Micron. Here was the price it was the day it closed before earnings. That number is important because I'm looking for what the PE ratio was compared to what it was before people started buying it when it spiked up after earnings, okay? So the PE ratio for the trailing 12 months was 25.55, which meant that for every dollar of earnings, someone was paying $25.55 for it. But that's trailing 12 months. Why does that matter? What does that mean? This is what that means. When we look at the previous earnings, it was lower than this $25.11. Here it was $12.20. Here it was $4.78. That's adjusted EPS, but it's averaged out. That's what it means by trailing 12 months. It's averaged out. Trying to take me off the screen. It's averaged out. It's down here at the bottom. So when it averages that out, what is going on with my mouse? Oh, I see what's going on. When they're averaging that out, it gives you a different number with this 25.55. So if we use the current EPS and then we use that as an average, then you're getting a PE ratio of, for every $10 based off this previous price. That's what I was getting in my formula when I looked it up. So I'm still working on it. I think I understand it. If I could be wrong, let me know in the comments. Explain it to me for what I'm getting. It looks like it made it look like it was a bargain. The PE ratio dropped dramatically because of how high those earnings were per share when it jumped up to $25. Now this is the adjusted EPS down here where you see $25.11. That's the adjusted EPS. I put in the GAAP, the generally accepted accounting principles. So if you don't know what that is, let me show you that. So we go up here, we go to the SEC website, SEC. Whoo, and I know you're like, man, if you got to go through all this to do some stock market stuff, man, I'm straight. I'm telling you, you got to do your research. Can't nobody sit up there and pull wool over your eyes if you know how to go look the stuff up yourself. Full text search. Zoom this out a little bit. That's 150. Now we go to more search options. We put in the ticker MU, Micron. Here was the report that I looked at. It's already highlighted. So they had earnings on the 24th. Yep. So we open that up, open that document. We want to scroll down. Here's the press release for June 24th. Now what I'm looking for, I am looking at consolidated statements of operations right here. Okay. So here's the time frame. You got the third quarter, May 28th, 2026. We're looking for the EPS, earnings per share. You see that on the left? And we're looking for the basic, not the diluted. So the diluted includes all the outstanding shares. Basic is right here. So $25.03. So you can see that that was a different number. This is the GAAP number. The number that's posted on the Thinkorswim platform is the adjusted EPS. That's why that's higher and it doesn't match. Okay. But my point is, this company crushed earnings. They're in the information technology sector. So we go back over here to analyze. Market Watch, Micron. I'm looking for MU, information technology sector. Let's back up. MU right here. There you go. Micron, red, down 6.69%. They just had crazy earnings. Why are they pulling back? My theory is that they're rotating out of this sector. Even with great earnings, it wasn't able to hold. Now, it could be early on this. Could be early. It's hard to time the markets and things of that nature. But they would have to consistently have earnings like this. They would have to consistently have earnings like this. We looking at this. This is crazy. $25. Let's go. Did I close that out from the SEC? No, I didn't. So they tell you what it was a year ago and the previous quarter. So here's the previous quarter earnings per share. Look at that. Can I highlight this? Yeah. Let me use this mouse. So here's the current EPS, the GAAP EPS. Here was the previous one. What is going on? Come on now. Come on now. Come on. Come on. Here's the current one. $25.03. Here's the previous quarter. $12.25. So it doubled pretty much. And then some. It doubled and then some. So here is, that says third quarter, May 29, 2025. So this is a year ago. So this is the previous quarter. That's the previous quarter number. Here's a year ago, guys. Do you see this? I hope this is clicking. A year ago, their EPS was $1.69. Now it's $25.03. The previous quarter, it was $12.25. This rate of growth, in my opinion, is not sustainable. These chips are not going to be priced like this forever in the information technology sector. This hardware ain't going to be priced like this forever. This is temporary. So if this is temporary, then the price would have to come down to go back to normal valuation. A year ago. Now, 3 months ago. And you see this take a little bit more effort and a little bit more time. But even though it seems like a lot, it becomes faster when you know what to look for and where to find it. So to me, this is more evidence that's telling me, hey, this information technology thing is all hype. It is moving up right now because the numbers are justifying it. But for this to be sustainable, no. And then we're seeing evidence that money is moving into other sectors. Somebody buying it. Why is it going up? And then somebody selling it. Why is it going down? They need the narrative to stay hyped to have somebody to sell it to. That's the whole point. As long as they can keep the public under this idea that everything's going to be fine and everything going to be okay, the longer they can sell it to us at these overvalued prices. That's the idea. And then us not taking the time to do the research like I'm showing you how to do it, we don't know no better. And we just buying it because it keep going up. But then something happens to you like what happened with ON. No news, no explanation, and the floor falls out. Look at the pattern. Look at this. That don't look familiar? Let's do this one more. So this is ON in the information technology sector. You see how confusing this section look? Now let's go back over to Micron. You don't see how that look confusing? Like it don't know which way it want to go? And then this gap hasn't been filled yet. Now, that doesn't mean it has to come down. I'm just saying that gap hasn't been filled yet. But then when we looked at ON, it dropped with no news. Floor fell out the bottom. News couldn't even explain it. But it's in a sector that I believe is already overvalued. And then we see other sectors that's starting to perform well. And even right now, it's already rebounding. But it's rebounding. Why ain't nobody paying attention? So extended hours, guys, is on low volume. You see this? This isn't as much volume that you have in regular trading hours. So it's easy to pump this up during extended hours, make it look like it's okay, then the market open and then sell it to people that don't know no better at those higher prices that they pushed up in extended hours. You got to understand the game and know how it works. Okay? So this is what I'm paying attention to. Me personally, what I like to do, I like to look for companies or sectors that are undervalued or fair value that's not being driven by a whole bunch of hype. Because all they do is rotate. They pretty much just rotate. The sectors nobody's paying attention to, they end up being dirt cheap, come all the way down to levels that they shouldn't even be at. And then all of a sudden, when the sector that everybody focused on and all overhyped, when that runs out of momentum and out of steam, and the institutions that sold it to everybody, they tank. But then they got to put that money that they made to work somewhere. So where do they do? Where do they go? They run over to other sectors that were extremely undervalued, that people weren't paying attention to, and just buy those up while they're low, drive the price up, and repeat the cycle all over again. All right. So I covered SpaceX. I covered Micron. I covered ON. I said I wanted to talk about Moderna. Somebody just commented. It's overextended and also the market. And I'm sorry I did not hear this thing go off, but I'm about to pull your chat up right quick. I have no idea when you posted this chat, but I'm about to pull it in right now. It's overextended and also the market is starting to price in the fact that it's going to be impossible to fill those futures orders. Okay, well, you can teach me something or share something with me about that, because I'm not really into futures, and I'll admit it, I don't understand it. I know it's like it's kind of like options in the fact that they expire and you don't really own anything. It's like a contract or a derivative. That's as far as I got into it with futures. But it's going to be impossible to fill those futures orders. So I don't know if you're talking about futures or future orders. So if you still there, clear that up for me, please, in the chat. Like, explain that to me. Help me out. But I see you. I feel you. I got you with that about it being extremely overextended. But yeah, guys, it's not just that. Like, if you look at the charts on some of these companies, it's like it was all the way down here, then it just went straight up. Like even saying this, SNDK. Look at this. $40 to over $2,000. No, sorry, not futures. The future order in MU. Thank you. That's what I mean. So like cement, thank you so much for clearing that up for me. So, yep. So like the semantics, like it's not you, like communication, period. Like it's better to just say, hey man, I don't know. Are you talking about this? Or are you talking about that? Because it could have been futures or it could have been that. So I'm so glad you cleared that up for me. So yeah, got it. But thank you. You did the right thing and I did the right thing. Instead of acting like I understood, just go ahead and say, hey, it could have been that and it could have been that. But thank you so much for clearing that up for me. And I'm glad you're still here. Yeah, guys. So this is I'm just looking at what's happening. To me, this is a bubble. I don't know when it's going to bust, but it's a bubble. These prices are not sustainable. And from now that I understand what you're saying future orders. So they got orders. They must have a lot of future orders that they need to fill, and they might not be able to fill them. And then there's other competitors. You got other companies doing the same thing. Then you have some stuff going on with China, like China trying to do something where they're getting into the semiconductors and this equipment that these people need or want. So we just got to keep our eyes open. And to me, when it comes to this stuff going on with the stock market, it's better to make your own decisions. I got you. I got both of the comments. I'm about to pull them up on the screen. It's better to make your own decisions and your own research. And the reason being is because when you educate yourself and you do your own research, you believe in it more than somebody else just telling you something. Because one, you don't know if anything that they telling you is good or not. You don't know that. But when you do your own research, your own homework, your own education, and you learn how this stuff works, and you actually start putting the information to work, you have a different type of confidence when you enter the market. To me, it makes way more sense to buy something that's at a value price and you understand the business. You understand the business. Like I see what this business does. I see what they're doing. I understand how they make money. I'm looking at the evaluation, and then I understand what's going on with the other parts of the market. This just isn't a popular sector right now. They're not laying nobody off. They still have cash in the bank. They're not running on debt. They're profitable. Like this crazy thing with SpaceX by itself is not even a profitable company. How are you valuing this company at $1.7 trillion and they not profitable? That's insane. But hey, say that to the people buying it. I mean, that doesn't stop certain people from buying it. And then, you know who the real winners in companies that IPO? Banks. Banks. I'm gonna say it again, banks. And I'm gonna show it to you since you giving me your time. I'm gonna make it worth you being here. So let me show you something. SEC.gov. I put in .com. It's the wrong thing. SEC.gov. Let's go here. And I want to show you two companies because I did this in a previous live stream, but I want to show you what I'm talking about in this one. So if we go full text search, I don't know why I keep saying speech, and we put in SPCX, SpaceX, and then when we go to SpaceX, and I'm gonna pull up the prospectus. Man, it's all the way down here now. Prospectus, where's the prospectus? Man, they didn't, oh my gosh, look how many reports they done filled out since they went public. Wait a minute now. Wait a minute. This is crazy. Wait a minute. That is the right ticker. So go to the last 30 days. And I might be scrolling too fast. So let me go back. I could have sworn I looked here before. I'm looking for the prospectus. There it is. All right, the prospectus. And I was on the screen. You couldn't see me click it. So let me close this out. The prospectus right here. So when I open this document, and zoom in a little bit. How many pages is this? It's not gonna let me zoom. There it is. Zoom. What I want to show you guys is this right here. Here go the banks, guys. These are the underwriters for this IPO. These are the underwriters. So these companies bought SpaceX. Goldman Sachs, Morgan Stanley, Bank of America, Citigroup, JP Morgan. The bigger the name, meaning the text size, the ones on the top, I think they bought the most shares, and then it goes down, right? So all of these banks bought all of the shares that SpaceX was going to go public with. So SpaceX was paid in full before the shares even hit the market for the fixed price of $135. It's right here. This form is public, so you know how much the banks paid for it. The banks charged a fee of 90 cents per share, so they only end up paying $134.10. Then they take those shares on the market. Nobody else can compete with them because they're the only ones that own them. And then they sell it to us on the market at a higher price than what they paid for it. Okay? That's the game. So they making money out the gate by selling it for more than what they paid for it. Now, SpaceX doesn't seem that crazy when we think about it like this. When they hit the open market, they hit the open market at $150 per share. So when I pull them up on the charts, SPCX, and we go there, here's the week, here's the day that they IPO'd. So when they IPO right here, pull up my floating data box. The starting price open $150. They made $15 a share, big deal. But it was a whole bunch of shares. But we'll move on. I'll give you that. So let's look at another company named Figma. Now, this is what caused me to start looking at these other companies that's involved with IPOs, not just the banks, but remember those four names in particular: Goldman Sachs, Morgan Stanley, Bank of America, and JP Morgan. Remember those. Now we're going to pull up another company. So I'm going to go out of this, close that out. This got us zoomed in. Crazy, don't it? Zoom out, 150. So now we're going to go to this company named Figma. FIG is the ticker. So when I go there, we're going to pull up their prospectus. Now, when I pull up their prospectus, it says nothing found. Yes, it is. Stop lying. So last 5 years, we can do that. Search. No results for 5 years. Come on now. Clear all. Company name, FIG, Figma. Here it is. Last 5 years. All right. See? Glitch. Now, go down. We're looking for the prospectus. Page 3. Here it is, prospectus. Now check this craziness out. Zoomed in. They bought these shares from this company for $33. What companies do you say? I'm glad you asked. Morgan Stanley, Goldman Sachs. I'm skipping over this one. JP Morgan and Bank of America. Remember I told you to keep your eyes on those 4, right? So if they bought them for $33, how much did they sell them on the open market for? Great question. Let's go over to the charts and see. So now when we go back to the charts and we type in FIG, we're looking at a 1-year daily chart. Let's go to the weekly. So it's a 10-year weekly. They IPO'd July 28, 2025. They opened at $85, guys. Did you hear me? We just looked. They bought them for $33. They sold them on the open market for $85 starting. Over 100% return out the gate. They doubled their money. Who did? Bank of America, JP Morgan Chase, Goldman Sachs, and Morgan Stanley. They look like the winners in this. This stock came down. Who bought it? The public? The public. And they call us dumb money. Down. Guess what? Those 4 companies we named, they all publicly traded. Let's look and see how they stock doing. Morgan Stanley. Whoa, wouldn't you know it, huh? They eating off those IPOs. Look at how they stock performing, and we ain't hearing nothing about it. Everybody talking about information technology. Meanwhile, they eating off of SpaceX. Now they starting to pull back because here go Friday's candle. So they starting to pull back. But they been eating. Look at this run. Now, what was the other ones we said? We said Bank of America. So that's going to be BAC. Bank of America. 52-week low of $44.75. 52-week high. They just hit it on Thursday. $59.20. Okay. Then what was the other one? Goldman Sachs, their ticker is GS. Oh, we already looked at that one. Then we said Morgan Stanley, MS. And then we had just looked at Bank of America. They look so similar. I'm going so fast. And what was the other one? We said Morgan Stanley, Goldman Sachs. Morgan Stanley, put me back on the screen. Morgan Stanley, Goldman Sachs, Bank of America, and JP Morgan. So it's JPM. JPM. Now here's the one that's kind of like sideways, right? But still, 52-week low, $279.10, jumped up here. Look at them. They all, you see what I'm saying? Now, how are all 3 of them pulling back at the same time? Did you see that? It was only one of them that didn't seem to be pulling back as hard at the same time. So you got JP Morgan pull back, really pull back on Friday. JP Morgan, Morgan Stanley. Let's go back and look at this. Pull back. Morgan Stanley, Goldman Sachs. Pull back. They all doing the same. Bank of America. This is the one that was kind of holding right above support. But now when you're comparing it to his peers, 3 of them down. So why wouldn't this one follow? Guys, you have to ask these questions and dig into this stuff and look around. That's all I'm saying. That's all I'm trying to say. So I don't think we looked at Moderna. So let me look at, I think we did. We looked at that at the beginning of the show, MRNA. But anyway, Moderna caused me to start looking at the healthcare sector. We said the ETF for that was XLV. That's not M. I shouldn't have put that there. XLV. State Street Global Advisors Healthcare ETF or healthcare fund. So that's what we had talked about with that. And then we use the scanner. We go to scan. Information technology. We change this to industry, healthcare. Take me off the screen so you can see it. What type of trader are you? I'm about to pull your comment on the screen. Give me a second. I'm working with the controls. There's your question. And here is the chart. I don't like using the specific terms of day trader or swing trader or investor, so I'll explain. If I had to give myself a type of phrase, I'm a probability trader. I look at probabilities. What can I do to put the odds in my favor? So day trading, I think the success rate is less than 3% as a day trader. So that tells me not to day trade. The odds are not in my favor. So I stop day trading. If I had to put it in a category, it would be more of swing trading and investing, because the odds are more in my favor with giving myself more time for whatever I think is going to happen to play out, if that makes sense. But day trading, no. Long-term, short-term, or swing. Well, you asked both of them. I answered both. It depends on the position. So all my positions are not the same. So one position may be a long-term position and another position may be swing. But as far as that'll be answering your question the best that I can. I definitely don't day trade options. I have traded options, but as far as recently, I have not been doing options because I have positions to where, remember I talked about probability. When I looked at options and probability that I'm working out, it's better to sell options than it is for you to buy them. The odds are in your favor when you're short on options. And I don't know how well versed you are with options, but short in options means that you sold them. It doesn't mean that you're bearish. It means you sold them. So writing options, the odds are in your favor. One reason is because you don't have time working against you. You have time working for you. The time decay, the theta. So when you buy an option, you know it's decaying and you paid that premium. But if you sold the option to open the position, good. Got it. You're very versed. Awesome. Didn't want to assume, but yeah, 100%. So yeah, I'm pulling all your comments up. Very versed. Awesome. So yeah, the odds are in your favor when I was talking about the probability of actually selling those options. So now with me having long positions on ON in stock, selling covered calls wouldn't be in my best interest if now I'm bullish on those stock positions. It would have been better if I had sold those call options against my stocks when the price was higher because it pulled back. But now I feel like it's bottoming out and it'd be stupid for me to sell call options against them and then end up losing the shares and getting them called away. So that's that. I like options more as a hedge than actually just trading. Now, if you're doing spreads, it might be cool, but you still got time working against you. You know what I mean? So like the vertical spreads, I started looking into it again because I haven't did it in a while, but like using spreads together, you can try to capture moves, but the further you are away from expiration, the less the price action is sensitive on those options. I hate it, man. It's just it's too many nuances for me. Besides just the fact of hedging positions, it just makes more sense. Yeah, I like that theta. I like that theta when you selling it. When you selling them options, it's wonderful watching it just make money because time passing by. So like combining stock positions with options, hedging, I mean, even if I was doing it on some of the shares and not all of them, You making some money, like something's happening versus you just sitting there waiting for something to play out in your favor. But yeah. So what type of trader are you? What type of trader are you? Do you like? What type of markets do you like? So that's the options market. Consider yourself long-term, short-term, swing, day trading. Take that off the screen, put the Q&A thing up. Go here, bam. So yeah, we was talking about changing this to healthcare. So we changed this to healthcare. Healthcare industry. Take me off the screen. Healthcare. Bam. And then click scan. That's why it didn't change. Market cap, Eli Lilly, Johnson & Johnson. So what we can do, we can turn this into a actual watch list, and then we can skim through these. I like futures, scalp high, volatility. Let me put you on the screen and read this at the same time. Take the Q&A off. I like futures, scalping, high volatility, FX carry traders. I'm lost. Is that for Forex? FX carry traders. Not biased. I just love trading. I trade what I see. Okay. That's what's up. That's what's up. Well, I wish you luck, man. Good luck with everything you're doing. I hope you make a lot of money and you continue to learn and grow, not just your account, but as a person. Because we got to work on both. We got to work on both. So let me see about turning this into a watch list. Save as a watch list. So I'm going to call this XLV Healthcare. Let me do that. Healthcare. There we go. Save. Got it. Now, when I go to the charts, what I can do to quickly skim through these companies. Watch list right there. So now I go to personal, XLV watch healthcare. Now I'm gonna link that to the chart. So when I select it, wait a minute, where is market cap? I don't think I got market cap as one of these. So go in here in the settings, customize. Yeah, I don't have market cap. So let me look for that. Forex, got you. I'm gonna pull that. I wasn't looking and it didn't go off. USD, and I think that's Japanese yen. So United States or the US dollar, Japanese yen, Forex, yes, awesome. Yeah. So I'm kind of getting into the lingo. You see, I'm struggling just a little bit, but I'm getting it because I'm learning. I'm getting there. So market cap. Here we go. Market cap add. I'm gonna pull this to the top and then click. Do I have to click save as? No, I don't. Here we go. Market cap. So drag this over. And I want the largest market cap at the top. So there we go. Eli Lilly. So what I did, guys, what I'm doing here is I'm making it where, man, thank you so much for this conversation and these comments, man. This is going to help me out a lot. And if you could, please hit that like button and consider subscribing to the channel. If you've already subscribed, thank you. And if you haven't, man, just thank you for watching tonight. So here we go. So we put that watch list together. So now what we can do, we can quickly look at these companies just by clicking the down arrow. And we can we condense this and still do that? Yep. So here we go. So we can start from Eli Lilly. So now we're looking at these healthcare companies. We created a watch list. Go to time axis, change this to 30. And we can just use the up and down arrow. I got to go back and select it. And we can quickly browse through this watch list and see how these healthcare companies are performing. You see this? This is crazy. So we paying attention to what the company is or who the company is right up here. So here's the ticker. Here's the name of the company. Bam. And we're just browsing through it to see how this healthcare sector is performing. Now, remember, everybody talking about information technology. So look at Eli Lilly. Here's Johnson & Johnson. I tried to pronounce this early. AbbVie Incorporated. Look, this is crazy. So if we use the trend line tool from this low to that close, it's up over 17% in a matter of 7 days. I ain't heard nothing about this in the news. I ain't heard nothing. But if we looking at the chart, which we can find opportunities like this. Remove drawing. Let's go to the next one. We got to go back to the watch list. UNH, United Healthcare. Look at this. And this is gapping. This one is gapping to the upside. You got a gap here. You got a gap here. And let me show you how I identify these gaps on my channel. I turn it yellow, then I extend it over to December 1st. This is the date I like to use. That's too far. We going out years. We don't need to go out years. We need to go out months. Here we go. I did that too fast. December 1st. There we go. And then we extend this one and turn it yellow as well. Yellow, December 1st. Bam. Gapped up twice. Ain't came back down and filled it yet. And I think I see another gap. Smaller, but I think I see two more. You got a gap between these 2 days, and then you got a gap between these 2 days. Oh, man. Gap. Gap. Yellow. Boom. December 1st. Boom. Edit. And I'm about to get ready to end the show, guys. I just want to skim through a few of these other tickers just to keep seeing how this healthcare is performing, because this is unbelievable. There we go. Zoom out. Look at those gaps. Crazy. Wow. All right. So let's get ready to wrap this up. Thank you so much for the comments. NLMJR. I'm going to pull a comment up so I can highlight your name again. I'll pull up the one where you said 100%. So here we go. Chat. There we go. Thank you so much for your comments. Shots out to NLMJR. Appreciate you. Appreciate you. So get ready to close the show. You said, you got another comment. Hold on. UNH has good financials too. Appreciate you. I'm going to look at those because I definitely wouldn't just dive into the company. So how I do the live streams on Monday through Friday with the market recap lives, I would look at the not look at the finance. I look at their websites. I look at the website, see how that's doing. We look at the stock, we look at the charts. But like personally, on my own time, I would look at the financials, look at the balance sheet, the income statement to see if they're profitable, like we did earlier when we looked at, I forgot what company we were looking at, but we were looking at the quarters, how they performed last year, the EPS, like down at the bottom of the screen. But once I found out on the bottom of the screen on the Thinkorswim platform that these are actually adjusted EPSs, they're not the actual GAAP, the generally accepted accounting principles. I actually go on the SEC website and look at the financials on the income statement or consolidated operations. You know, to go by more than one name. look at the revenue on the top line and look at the net income on the bottom line and the different EPSs to find out what's going on with the company. But yeah, thank you so much for those comments and tuning in. I really appreciate you. About to get ready to end this show. So you already know. I hope that you learned something and I hope that you earned something. Thank you guys for joining me tonight. Next Sunday, I don't have a date in front of me and I didn't update this, but let me go ahead and slow it down and look at the date because we're going to be back. I think that's June 5th. Yeah, we'll be back this Sunday, June 5th at 9 p.m. Eastern time. We're reviewing that week's performance and let me slow down. Next Sunday on July 5th at 9 p.m. Eastern time, we're reviewing that week's performance of the 11 sectors in the S&P 500 index. Companies that stood out, notable market news. Let me get this. Notable market news and performing a live Q&A so we can focus on building our community. And make sure you keep tuning in weekdays following a market trading session at 11 p.m. Eastern time. And guys, on the YouTube channel, let me pull that up for you before I let you go to let you know what's going on over here. So on the actual channel, here we go, guys. And I got some new subscribers. Thank you guys for subscribing to the channel. Thank you so much. Got some new subscribers. So here we go. We're tuned. This is my YouTube channel. So I'm gonna zoom in and show you guys that we have. Why don't they wait a minute now? Come on now. I know I scheduled them. Must not be doing it right. Here it is. Nope. Something's going on, man. I'm zoomed in too far. I know I scheduled these live streams. Thanks, bro. I'll watch it next time. Do you have a Discord? Nope. Don't have a Discord. I do not have a Discord. I'll pull that chat up in a second. I'm over here struggling now, trying to figure out. I know I scheduled all the upcoming live streams for. Here they go. I'm looking in the wrong spot. Here they go. So all of the live streams are already scheduled for next week. And I gave you the wrong date. It's July 6th. Let me give you this calendar to go to the calendar. Yeah, I put the wrong date on there. Let me update that now. That's not supposed to say July 6th. That's supposed to say July 5th. Oh, yep. Let me fix this. So I'll go to live. And I'm zoomed in so far. Oh, I got to go into my actual studio. I'm not going to do all that on live. Give me a second. Put this back on me. I'm going to fix this now while I got you guys here so you can see that I fixed it. I put the wrong date there. So let me put the Q&A back. Thank you for the comment. Let me fix this. Zoom out. Zoomed in too far. This is hurting my eyes. All right. Go over here to the studio. Let's fix this date for the next Q&A. I was moving fast trying to hurry up and get all of that stuff up before we started this live stream tonight. Put the wrong date for that Q&A. So we go to the studio. Here's the studio. Go to content. All right, go to live. Yeah, I can bring y'all over here. Y'all can see this. So we're going to go over here, pull this in so you guys can see it. Little behind the scenes action. So right here, we need to update this schedule. So go down here, playlist. This should be upcoming live streams. Done. And then take these off. And the schedule. Where's the schedule part? Schedule is supposed to be for Sunday. 9 p.m. Got it. Save. Bam. Now we need to go back to the channel. Got it. It has not updated. Let me close some of this stuff out. Let's close some of this stuff out. and then refresh this and see if there it go. I see it. It updated, guys. Oh, I see what's wrong. The title is wrong. It was scheduled right. The title is wrong. The title is wrong. Studio content. Blow this back up. Live. The title is wrong. It was scheduled for the right date. The title was just wrong. Here we go. July 5th. No comments. Got it. July 5th. Cool. Save. Go back. There we go, guys. So all of the shows are scheduled and ready to go. So you can go right here to the YouTube homepage. Now, if you've been watching on X or if you've seen this on X or all that other good stuff, I'm going to do a screenshot and post it as a picture over on X. Okay? Because you can't I don't think you can schedule live streams on X. But thank you guys so much for tuning in. Thank you, new subscribers, for subscribing to the channel. I definitely appreciate you and everybody that tuned in. And this was an awesome show. I didn't expect it to be that long, but I'm glad that you guys got something out of it and tuned in. Let me go ahead and finish wrapping this up. So remember, the market is going to be closed on Friday in observance of July 4th, even though it's on Saturday. So the market will not be open on Friday, guys. So keep that in mind. Make sure you keep tuning in Monday through Friday at 11 p.m. Eastern time following trading market sessions. All right. So take care and God bless.